Thank you very much for joining. Sorry for the small couple second delay there. I hope everyone's doing well. My name is Fabian Monaco. I'm the president of Gage. Today we'll have the opportunity for me to go through our presentation. After I'll talk about our Reg A Plus finance, and then we'll have an opportunity for some Q&A at the end. I don't necessarily anticipate the actual webinar the full 1 hour, but like I said, as many questions as you want to ask, I'm here to essentially answer them. You can also reach me after this particular presentation at ir@gageusa.com, and I'll be more than happy to obviously discuss with you guys. And so, yeah, I want to thank Rob and Sandy from Koach for obviously putting this on. We've done a phenomenal amount of work together. I highly respect both Rob and Sandy and what they're doing in the Michigan space. I think they had a great beat on the market. They attacked, one of the best markets for cannabis in the U.S. And yeah, many congratulations to those two and what they're doing in Michigan. So we'll get started a little bit on the Michigan market. So Michigan is already one of the fastest growing legal cannabis markets in the U.S. Adult use sales continue to grow. They're up over 500% since January. As of August, we still had 245,000 medical patients. The best part about Michigan is the strong underlying medical base. So historically, Michigan had the second largest medical cardholder system behind the state of California. And so when you actually take a look at that and watched its progression, the caregiver model came out in 2008. And so you've had individuals going to dispensaries for now over a decade. You have a refined consumer in Michigan. You have some of the highest consumers on a per capita basis in all of the US in Michigan. So it's a particularly exciting market to be in, especially now adult use sales have continued to ramp up. And more importantly, I think as we progress, in the next couple months and the adult use market continues to grow itself, I think you're going to continue to see exponential growth in Michigan, not only, through the 2020 year, but over the next couple of years. Another particular key point about Michigan is the fact that over 75% of the population is 21 plus. A very interesting dynamic in terms of age, but the fact that, now is it already a relatively large state, being, 10 million plus people, the fact that the majority of those people are actually of age to consume is a very, very important key factor in how big the market can actually get to in Michigan. Last thing for us, it's great obviously to have a super strong market in Michigan, but you need to be able to tap into it. And so as I go through my presentation, you'll see that our assets reach over 90% of the population in Michigan within 1 hour's drive, and it's a particularly key important point as we progress. Now, a couple things on Gage. Why Gage? So we have an experienced leadership team, and I know so many companies in the space, like to claim that. Our particular founders have multi-years of experience, not only in the caregiver program in Michigan, but also in Canada. I would say, our sister company in Canada, right now a completely separate company, has been run by the two co-founders for over 4 years now. So they're used to these regulated markets, especially, Canada being one of the more regulated markets in the world for cannabis. And they have that type of experience. They bring that pedigree. They bring that experience that they've already had in other countries like Canada to the US. Not to mention their extensive work in the caregiver program for multi-years really allows us to adapt and tap into the market much, much quicker than some of our competitors. Another thing, for us, we've applied for, built, and operated licenses from, cultivation assets, processing assets, and retail assets in multi-jurisdictions as well. When you take a look at also our capital markets expertise, a variety of people on our team, myself included, Bruce Linton, our executive chairman, who was unfortunately not able to join us today, we've taken companies public already in the space. Bruce Linton has that phenomenal experience with Canopy Growth, pretty much, starting that thing from nothing, a couple pieces of dirt on the ground, to obviously, what it has become today, especially with that huge, massive investment from Constellation Brands. So when you take a look at the depth of the team, you really have every angle colored. you have the operational expertise, you have the retail expertise, and then more importantly, you have the capital markets expertise to ensure as we transition from being a private company to a publicly traded company, it's being done in the most, appropriate, efficient, and effective way. One key point about Michigan, which is extremely important, is the fact that you need to be vertically integrated. It's already a hyper competitive market, and so you need to be dialed in at each level of your company, from cultivation to processing to retail. If you don't have an opportunity to tap into all three, it's very, very difficult to have success. And so for us, it's a key point that we're one of the largest vertically integrated participants in the Michigan market. When you take a look at the opportunity in terms of what type of products we can sell in Michigan, it's also extremely expansive. The market has done, or I should say the regulators have done a phenomenal job at ensuring that the amount of products, the type of product, the variety of product is there for the Michigan consumer. It really allows you to combat the illicit market in such a better way as, versus other states where you don't necessarily have the option or the opportunity to actually sell the consumer a whole slew of products that they're used to consuming potentially on that illicit market. So I'd say that's another key and positive point on Michigan, the fact that the regulators have been so expansive with the rules and allowed a whole variety of products to be sold at the dispensary level. And lastly, we're going to be operating at scale. We already have our third cultivation asset that just came online in August. That particular asset, we're going to be harvesting some of the rooms this month. That'll be our third asset, as I mentioned, on the cultivation side of things. We're looking to expand with the use of proceeds from this particular financing. We're looking to expand the footprint that we have at that third location by another 80,000 square feet. Once we complete that project, we'll have over 150,000 square feet of cultivation. I would say that will hands down be one of the top 3 larger players in the space in Michigan, just on cultivation. Back to Michigan, I think it's worth noting a couple other key points about Michigan. I already talked about the great, strong underlying base that we have from a medical patient standpoint. Now, when you take a look at the market size potential, it's right up there, in the top 5. Many reports have already indicated that this market could get to $3-4 billion in just a couple of years. And so we're particularly excited about where we are right now at approximately, $1.2-1.3 billion run rate as of September monthly sales, as to, where we can get to, which is essentially pretty much triple that amount. When you take a look at also the growth rate that we've experienced in the adult use sales market from January to, let's call it August, or even January to today's date, it's been exponential. And then again, why? It's back to that big, strong medical underlying base that has allowed us to have that support and have that consumer that knows about cannabis, that's already consumed cannabis, let's call it a variety of times historically, and knows what they want. And so as more and more product becomes available in the Michigan market, you'll see the numbers continue to swell. And if you even look at, how Michigan has done on a monthly basis from, 2019, as you can see in the graph there, to what it's doing this year on a monthly basis, again, exponential. You're seeing, in many cases, a scenario where it's triple what it was last year on the same monthly basis. And when you take also a look at COVID and what that's done to the business, I would say, maybe from a delay perspective, couple the assets, that people are trying to get licensed in the state of Michigan could have a couple delays because of COVID. Some of the cities are shut down. It's tough to get a hold of various people at the various cities, which is another key point about the Michigan market. When some individuals or some entities have said, well, Michigan has an unlimited state license system, so why would I want to invest in Michigan? There's going to be so many players. While that's factually correct, people have forgotten the fact that it's the cities that have all the control in Michigan. It's a very similar market to California, similar market to Massachusetts, where you have multiple, cities that actually have the control. And even in Michigan right now, 2/3 of the cities haven't even opted in to the program. And so you have this real tight, I would say, city license system right now in Michigan that makes licenses extremely lucrative, especially ones today that companies like ourselves own. And then when you take a look at the depth in terms of how many licenses, our company has, we have, over 4 cultivation assets, we have 3 processing license and assets, and we have 13 dispensary assets. The ability to actually go and round up that many assets in a short period of time is going to be very, very difficult. So when it comes, again, back to COVID, uh, it was deemed an essential business in Michigan. So we really didn't miss a beat, especially when Michigan had various lockdowns and pretty harsh lockdowns as well, I would say. We really didn't miss a beat. Things continued quite well for our business. And, we had curbside pickup and walk-up pickup. And so that really gave us an opportunity to continue growing our business, even despite some of the setbacks that COVID has provided some businesses. When you take a look at the market comparison, as I mentioned earlier, it's a top 5 market. And so California, Colorado, and Florida are the 3 markets that are actually ahead of Michigan right now. I would say Illinois and Michigan are kind of battling it out for that 4th and 5th spot. Oregon's on their heels, but I don't anticipate Oregon kind of catching up, obviously, to Michigan and Illinois. They're much bigger markets. They're growing way, way faster. I think Michigan and Illinois easily catch Florida, and I think Michigan will have a really solidified third rank spot, let's call it, on a monthly basis from a monthly sales standpoint as we progress in the 2021 year. A couple operating highlights for our company. And so, we started off the 2019 year about ended in the 2019 year. Our 4th quarter in sales was about $1.5 million. As you can see, we've had a quick ramp up in our sales. We anticipate double-digit growth for Q4 as well in top line. So we've had really, really strong performance. Even our growth has been exponential, similar to the market in Michigan. So just starting from January, we've experienced over 187% growth in our top line sales. We consistently command a premium price for our flower products, and I'll get a little bit to that later on in the presentation. When you take a look at also, how long does it take for someone to return to our stores? It's a 12-day process essentially. So we're seeing consumers on average every 12 days. So that means at least our consumers are coming to our stores 2 times a month. Our average sales per dispensary, based on our August numbers as well, was $11 million. And so we continue to kind of see that level. And you'll see that hopefully that number start to increase as we have our own production and we increase our production with our 3rd asset, as I previously discussed. We expect to open and operate 8 to 10 stores by the end of 2020. Could be delayed a little bit in terms of that number. Again, I think sometimes people have a keen focus on how many stores do you have open? How many stores do we have open in 40 days? How many stores do we have open in 120 days? It's key to note that we want to maintain our brand and how our brand is perceived. We want you to come to our store and have that same experience, whether you're in Lansing, whether you're in Detroit, whether you're in Grand Rapids, and ensure that you have that same consistent experience and have that same product variety when you come to our store. Rushing out to, have 10, 20 dispensaries, while that looks great on a piece of paper or a presentation, if each of those dispensaries are continuing to not necessarily perform at the same monthly run rate that we want to have, which is approximately, 750,000 to, 1.25 million. That's kind of the range we want to have on an average basis for all of our dispensaries. We don't necessarily want to be a company that opens up 50 dispensaries in the state. We don't think that's a appropriate model for a market in Michigan. We think the sweet spot's between 25 and 30 dispensaries, and we kind of hope to attain that number as we progress in the 2021 year. A couple of items, again, just in terms of our growth as a company itself, indicated our monthly revenue, quick ramp up there, indicated our monthly cultivation capacity from January. So we had a quick jump there in January, only operating 1 cultivation facility, and obviously within less than a year's time, we now operate 3 cultivation facilities, and essentially our cultivation capacity has increased by 5 times. Our average basket sizes, a very, very key point and indicator of the strength of the brand as a dispensary, are quite high. I would say they're industry leading. When you take a look at our average basket size numbers in January, we had 130. I would say that's a very respectable number. That's well above the industry average. You take a look at the average basket sizes that we're now hitting on a monthly basis and have been doing so for the past 6 months. They've consistently been over $175 dollars, and we're 180 in August based on our last numbers. And also, in terms of operating stores, we've quickly ramped that up. We started off with 1 in January and now at 5. And as I mentioned, our goal is to kind of get to the 8 to 10 zone as soon as our production comes online, as we will harvest our third cultivation asset in November. You'll see a quick succession of dispensary openings thereafter, in terms of, obviously taking advantage of that harvest. When you took a look at the variety and product SKUs that we offer at our dispensaries, you take a look at the actual exclusive brand partners we have as well, which I'll stop there and talk a little bit about that. So we've partnered on an exclusive basis with the Cookies brand out of California. I would say humbly, it's hands down one of the best brands in the space. They continue to command a massive following, not only on the consumer side, but the social media side, even on the apparel side. They sell millions and millions of dollars of apparel on a yearly basis. It's just a phenomenal brand. Berner, who's one of the co-founders, and Parker, the CEO there, have just done a great job at building that brand from being California centric, and now branching out to a variety of states, ours included, and partnering with various cultivators and processors and retailers in order to get that brand not only in California being one of the best, but also nationwide. Also partnered with the Slang Worldwide group, phenomenal group. I would say they have some of the highest grossing legal brands in the space. Open Vape historically, I think, is a top 3 selling brand in the space. Also one of the top vape brands nationwide. And so we've partnered with them on an exclusive basis in Michigan. You'll start to see products from them in the coming months. We anticipate in the kind of Q1, Q2 time period. And again, just a couple of product examples give you a flavor of how we brand and what you would see when you come to our stores. And so I think what makes us special, and something that's been a keen focus for us, especially in the Michigan market, is the quality of the product. I've touched upon the fact that Michiganders have been essentially going to a dispensary for now over a decade. If you're an entity that comes to Michigan and you are not dialed in with your flower product, it's going to be extremely difficult for you to succeed as a company. It's a demanding consumer. It's a consumer that wants top-notch quality product and wants it for a good price. We continue to command some of the highest prices on a per gram basis. We're particularly proud about that, especially considering how competitive the market is. We, take a lot of care in terms of how we actually grow our product, and in terms of what goes into that Gage bag or that Cookies bag. We ensure it's of the utmost quality. So we hand trim everything. We hang dry it as well. It takes a little bit longer with that process, but obviously the pricing is reflective of what people appreciate and like about our brand. I touched earlier upon our cultivation assets. We have 3 operational cultivation assets. Our Harrison and Warren locations, they produce collectively about 300 to 500 pounds a month, depending on the strains that we're growing, as they vary obviously from a yield perspective. Our third cultivation asset that I previously discussed, Monitor Township, that particular asset, again, is already operational on a phase 1 basis. It will be producing anywhere between 400 and 550 actually, I would say, pounds a month. So on average, we should be in and around that 900 to 1,000, monthly run rate, about 12,000 pounds a year. We sell those pounds on average in our retail store for about 6,500 a pound. So you can see, as we start to get harvests from that third cultivation asset at the end of this month, we'll probably have that product on our shelves in the 3rd week of December. Starting from that day, you will see on a consistent basis, on a 2-week basis, consistent inflow of product. And so in January, I would say that would be roughly the first full month of all 3 cultivation assets pumping on a consistent basis. Should have, again, in and around 900 to 1,000 pounds of production. And when you obviously do the simple math at 6,500 a pound, we're starting to talk about some pretty staggering numbers on a monthly basis, especially when you look at the fact that that's only on our flower. not to mention any processing products we'll have, apparel that we sell, and any third-party products. So we kind of anticipate a very, very big Q1 and are very excited for the next coming months. I touched a little bit on our customer experience, wanting to have that consistency. It's great to have, top-notch quality product that I could say to you guys, how, we sell it for the highest price per gram in the state. But especially when you're starting out, especially when you're a new company in the space, you want to ensure you have a top-notch retail experience. You want to make sure that the people that work at your company are catering to consumers and essentially highlighting your brand in the best possible way, especially when you're starting out in the space. I touched upon the fact that Michigan is a rather competitive market. If you think just because you grow good quality product and you can easily wholesale it to anyone that you're going to have success as a company in Michigan, you are very, very far from the truth. So we manage that retail process. We ensure that, we have that interaction with the consumer, and we make sure that that retail experience is consistent, whether you're going to, again, our location in Lansing, Grand Rapids, Detroit, Ferndale. It gives you the opportunity to really have that same experience each and every time. Because if you have that same experience when you consume the product, you have that same experience when you come to our retail locations, it ensures that consistency in the brand. And again, that's reflected in our average basket sizes. So the average basket size in Michigan is $85. That in and of itself, I would say, is a phenomenal basket size, average basket size. In California, the average basket size is approximately like high 60s. So already Michigan's doing a great job, indicative of, again, consumer habits and how people feel about their cannabis in the state of Michigan. Again, you take a look at our basket sizes: 185 in May, 180 in June, 180 in July, 180 in August. We have, our preliminary numbers that are just getting vetted for September and October. And again, I think both of those months came in at 170 plus. I believe October was even closer again to 180. This month, I anticipate, again, in and around that zone of, anywhere between, let's call it 160 and 190. And that's a great spot to be in. Even if it would trend lower, 160 is a phenomenal spot to be in. You want to ensure that, when a consumer actually comes to your store, and again, the average consumer comes about 2 times a month, that average consumer is spending a lot at your store. And, we've done a great job at ensuring that each and every time someone does come, there's the opportunities for upsell. There's the opportunities to highlight some of the new stuff that we have. And so we're really proud of our basket sizes. And again, a lot of care goes into our retail and how it looks. I would encourage all of you, especially those of you based in Michigan, to visit one of our locations and actually see for yourself. It's great for me to tell you, obviously, how great our product is, how great our retail experience is. It's another thing, obviously, to see it, reflected in the awards that we're winning. We're consistently nominated for awards at the retail level and at the brand level. I would say we're one of the most well-followed brands in the space, and something that we continue to strive for and continue to ensure that we have that third-party validation. It's so kind of following the process here and how we like to showcase our company. Again, great to have top-notch quality product. You got to make sure you obviously have that retail experience to ensure that the retail consumers admiring and appreciating that top-notch quality product, not only at retail, but when they consume. But then you need to actually make it accessible. And so that's an important key point that we've thought about a lot within our company. Right now, we have 5 operational dispensaries. They're in Ferndale, Adrian, Cookies, which is a Detroit location, Lansing, and Traverse City. Just quickly on the Cookies, this is a location that's Cookies branded. It was one of the first stores out of California under the Cookies banner, and I'll get to that later on in terms of how well that dispensary is doing and how well that brand is performing in Michigan. And so for us, we want to ensure that we have the capability of reaching 90% of the population within a 1 hour's drive. And so you see that the way we've scattered our dispensaries is indicative of obviously having a keen eye towards the increase also in delivery in the state of Michigan. Not all cities allow delivery, but more and more are, and especially with COVID. And so it gives you the opportunity to really, really tap into the whole population essentially within a short drive of each and every one of your locations. So it really gives us that good expansive network. And keep in mind, you see 13 there today. We're constantly looking at a variety of other acquisitions in the space. We have one that we're pretty close on closing, should be closed within the next week or so. That will be our 14th location that we have. And you'll see also a quick ramp up as our cultivation has now caught up. You'll see a very, very quick ramp in the store openings as well. Remember, it's great to have store openings, but you want to maintain that consistency. You want to ensure that you have that same experience no matter which Gage or cookie store that you go to. Briefly touched on our awareness, and how well our brand has done in the space as well. I think it's always indicative the quality of a cannabis brand when you take a look at their social media engagement. And I mean, not a scenario where you look at how many followers they have and notice that they have, thousands of followers, but then you go and look at any one of their posts, whether it be on LinkedIn, Twitter, Instagram, and you notice that there's basically no interaction. It's a clear indication that, wow, okay, that particular post was probably, or those particular followers are almost guaranteed purchased by the company. We've purchased none of our followers. Every follower you see, the 20,000 plus, it says 22,000 actually on the deck here. It's closer to 26,000 now. We've been really ramping that up. Our brand is exploding in the space. We're particularly excited about that because the more eyes you have on the brand, the more people wear your clothing. You just continue to have so many touch points. You touch the person online, through social media. You're touching the consumers through the apparel sales. Our apparel sales continue to perform extremely well, and then you also obviously touch all your consumers through the actual product and consumption of your product. So we take a look at it from a multi-pronged process, and we want to increase the awareness of our brand. We want to show everyone how well we're doing. And if you also take a look at some of our partner brands, the Cookies Group, Run the Jewels, Burner, Rick Ross, phenomenal following on social media. They've showcased, each of them our brand on an occasional basis, which just continually increases our following and continues to elevate our brand to, a level that not everyone gets to have in the space. I touched quickly earlier on the Cookies partnership and the fact that we have an exclusive partnership on the cultivation side of things, processing side of things, and retail. And so we operate a Cookies location on 8 Mile in Detroit. It's one of the 25 licenses on 8 Mile, one of the 75 in the city of Detroit. Keep in mind, Detroit probably at its height, for those of you from Michigan, I would say they had close to 400 dispensaries. Not all of them obviously legal dispensaries at that time. Probably a lot of them being on the illicit side of things. So now that the state has done a good job of clamping down, we've obviously readily taken advantage of that. And Cookies was our 3rd location that we had open. We opened it in January. It continues to perform phenomenally well. It's one of the top medical dispensaries. Keep in mind, Detroit's medical only still. Which actually brings me to a good point that I didn't touch upon earlier. Out of all the assets that I've been talking about that are Gage operated, the majority of them we've been operating on a medical only basis. And so now, I'm not sure how many of you guys also follow us already, but we're going to be having our 2nd adult use store in Lansing, converted to adult use. Right now, we've been operating that particular location medical only, and we've been competing even then, with all the others that are adult use in a great way. It's a testament to, again, our brand and how well we perform and how well we're followed. Now, as the adult use market has ramped up, now that there's more third-party supply also for us to purchase and ensure you have a good experience on the adult use side of things in terms of product variety, you'll see more and more stores from us being open. Obviously, Detroit came in with their ordinance last week, I believe it was, keenly focused on ensuring that we can also get the Cookies location to an adult use state. So I would say, for now, we've been operating the majority of our assets adult use. You'll see a quick switch as we progress, towards the end of this year, where the majority of our assets will now be adult use, and we'll continue to tap into that exploding market on the adult use side of things. Taking a look at, from a credibility standpoint, as I mentioned earlier, some of the awards we won at retail, and at the brand level. You take a look at, our executive chairman as well, Bruce Linton. So Bruce Linton, he was he was obviously the co-founder, chairman, and CEO of Canopy Growth. Started that company from nothing. I would say it was one of the more illustrious companies over the years. Got a huge, $4 billion+ investment from Constellation Brands. Generally, Bruce is considered one of the pioneers in the space. He brings an immense amount of capital markets experience to this team as well. Obviously, he brought his company public. He took it from being worth a couple $1 million to what it was at its height, closer to 30 billion, and even to what it is today, which is still just a phenomenal company that he's built. Like any company, it's gone through some of its ups and downs, but his experience, his ability to tap into various investor groups, media outlets to showcase the Gage brand is frankly second to none in the space. Also, when you take a look at Burner and Cookies, they could have partnered with anyone they wanted to. Again, it's probably one of the most followed brands in the space. When they came to Michigan, and we were working with them, in terms of a partnership for many years, pretty much since our inception, trying to showcase what made us special, why we were the ones they wanted to partner with. When you see industry juggernauts like Bruce, like Burner, like Cookies, putting their name behind a company like ours, again, it adds that credibility. It showcases why we are special. I wanted a quick summary to end this presentation, talking about all the assets that we have. Again, one of the larger vertically integrated portfolios that you'll see in Michigan, not only from a licensing standpoint, from an operation standpoint as well. We have one operational processing license also in Harrison Township. I didn't really talk about our processing, but we'll have a processing lab attached to our Monitor Township location by the end of Q1. This is a key transformational aspect for us as well. So a lot of kind of positive transformations coming to the company over the next 90 to 120 days. We're doubling our production from a cultivation and footprint standpoint when it comes to flower. We're also now going to have our own processing lab. That is a key point in order to drive, increased profitability, increased margins on all extract-based type of products. This includes, vape pens, concentrates, and things along those lines. So we'll be producing that ourselves now moving forward. We've done so on a third-party basis for the majority of the Gage branded and Cookies branded, let's call it extract-based products that you see in our stores. Now that we're bringing that in-house, it's only going to increase our margins, increase our profitability. That particular project and processing lab should be done at the end of Q1, and that'll be at our Monitor Township location. So we'll have two processing licenses. The processing license at Harrison is predominantly used as a packaging hub for us. When you look at our dispensaries, again, over right now, 13 dispensaries, and scattered across the state of Michigan in order to tap into the majority of the population within a quick drive. And so for us, we're going to continue expanding that portfolio. We're going to try to essentially ramp up from 5 operational dispensaries to kind of 8 to 10 pretty quickly here. And then moreover, we really want to get to that kind of 20 plus zone by the end of 2021. We think that's a sweet spot for us, and particularly excited about having that ramp up and some of the acquisitions we're looking at, kind of tapping into areas where we think we'll have strong growth that are adult use markets as well, that we can take advantage of, and obviously through acquisitions. Taking a look at our management and board of directors, Bruce Linton, I've already touched upon. I gave a little bit of a background on myself. I'm more capital markets focused. My two co-founders are more operational focused, and our president, Mike Finos, has over 20 plus years of operational expertise. He's been just a phenomenal asset to the company. Brings that pedigree of managing thousands of employees. Right now, we're quickly ramping up our employee base. We're 260 strong. As that continues to grow, having people on our team that are used to obviously having larger teams, and managing those teams is going to be an invaluable asset to the business. The co-founder, one of the co-founders, Mike Hermes, again, exceptional experience in both the U.S. and Canada, in both regulatory markets. Someone who's been, involved on the cultivation, processing, and retail side of things for many, many years, and kind of knows what works already. This is not a team that, has to go have a bunch of trial and errors. This is a team that knows how to execute and has been executing phenomenally well so far. Dr. Rena Harb, again, a lot of regulatory expertise, not only in the cannabis space, but also in the pharma space as well. And on both sides of, both in the US and in Canada. Again, very, very deep North American expertise across the team. And lastly, our CFO, Dave Watsa, again, no stranger to, the public markets, has been a, 30 plus year finance professional. And, we think we've really assembled one of the best teams in the space. You have operations covered, you have the finance team covered, you have the capital markets team covered. And then more importantly, you have, the industry experience covered as well. People that have already done things in the space multiple times over. When we, started our first grow was at Warren. And so that particular grow was the first one. We got that up and running relatively quickly. Kind of similar, footprint and blueprint to our Harrison Township location as well. And again, just, similar footprint and blueprint. I shouldn't say footprint. Footprint was obviously much larger with our third location, but similar blueprint. We don't have to really, rejig things or say to ourselves, we didn't really, have that grow set up properly the first time. Well, this is already, the 10th plus grow that this team has set up. They know what works, and it kind of allows us not to kind of stumble on ourselves as we go on and expand our assets. So, in case you want to reach out to us after this webinar, if, I don't get to answer all the questions that are asked, feel free to reach out at ir@gageusa.com. Also, I encourage everyone to visit our website, gageinvestors.com. It will outline the current Reg A process that we have and that we are engaged in. And so, to finish the conversation before we get to Q&A, the company launched a Reg A Plus financing a little over 3 weeks ago. Actually, I've had phenomenal success with it so far. A variety of investors have been engaging with our IR team, and a variety of investors have already completed the process. I reached out to Sandy and Rob to see if there would be any interest within their own network. Obviously, I wanted to also showcase, one of Sandy and Rob's key partners on the investment side of things in terms of their investment into the space. They've been, again, super supportive of us as a company, have really allowed us to ramp up our, own growth as a company on the retail side of things. Have done a phenomenal amount of transactions with them, and also key locations within our portfolio, and reached out to them to see if there would be any interest in obviously participation in our Reg A Plus financing, in addition to introducing ourselves to some of their investors as well. And so the Reg A Plus financing, it's considered almost a mini IPO process in the US, adds an immense amount of credibility to, especially a cannabis company. When you take a look at the fact that we have 2 years audited financial statements, 6 month auditor reviewed statements for 2020. We have a offering circular that we went through the process for that with the SEC that essentially discloses pretty much everything you would need to know about the company. It allowed us to, elevate our brand, elevate, the credibility, from our company standpoint, and ensuring that we had all these things in place before we did this financing. And obviously allowing us to showcase our brand ahead of our go public. Our anticipated go public timeline that we want to hit is Q1 2021, probably be in the later part of Q1 for 2021. And so this investment is essentially acting as our go public financing. Right now in the US, plain touching businesses such as ourselves or any other MSO out there is unfortunately not allowed to list in the US. And so when we started and embarked on this process, we had hoped that by this time we did have the capability of an S1 registration. Obviously, some phenomenal wins for the cannabis industry through the election earlier this week. Obviously, we know there's no solidified president as of yet. But if you take a look at the wins in places like New Jersey, Arizona, and the fact that now over 1/3 of the U.S. population is basically housed in adult use states. I think it's now also 8 of the Republican senators are within or are actually at the helm of adult use states as well. I think it's a given that we're going to have more and more regulatory reform for the positive for the industry in the US. And so again, this Reg A process allowed us to build that relationship with the regulators early on. Should there be an opportunity to have, a listing in the US, we'll be able to quickly pounce on it, quickly turn our offering circular into an S1 registration. So I just want to give you guys a couple of background notes on the Reg A process. In terms of participation itself, you go to gageinvestors.com. You can look at the offering circular. You can look at our, our video that we put together, give you a little bit of a, more of a taste, I should say, of, our brand and what it's all about. We have our corporate presentation, which I just went through today. And then obviously gives you the opportunity to go through an electronic process, very easy process to fill out a subscription agreement to participate. So I'll stop there. I'll actually take off my video so I can take a look at some of the questions you guys may have. Okay, so one question said, in terms of recording the video, we do have this video recorded. I can most definitely upload this particular video for people that didn't join today. So that should be not a problem at all. Okay, so one person asked, can you share some of your annual sales of some of your open location, why you think they dwarf, any of your competitors? And so I think, from our standpoint, went through our monthly sales, we've been averaging anywhere between, 4 to, 5 million bucks for the past couple months, yet to see how, October will shape up. We're performing well above our weight, by industry standards in terms of, average dispensary numbers. We think, there are a variety of reasons why we continue to dwarf, some of our competitors. And it just comes down to the product quality and the expertise in the business in terms of being able to tap into a variety of, I guess, tactics, let's call them, or industry, know-hows in order to ensure that the company performs, much better than some of the newer entrants in the space. And so we have weekly product drops. I would say that's, one item that, people often forget. People want to experience, new products and new flavors, especially on the flower side of things. And so we try to keenly focus in having, weekly product drops. Usually on a Thursday or Friday, we'll have a big product drop for the new flavors of the week. Some of these flavors either, haven't been available for consumers for a couple of weeks, or they're brand new flavors. That helps drive a lot of traffic to the dispensaries. It allows you to tap and upsell some of those, clients from simply only purchasing the flower products that they came to pick up, to then, potentially purchasing some apparel or some other concentrates or, ancillary products in the space. More importantly, having the retail experience on the team, having, individuals that have already run dispensaries historically, really allows us to, have a leg up on most of the other competitors. And no doubt, because Michigan has been, a market that had a strong underlying base of medical patients, there have been dispensaries that have been operating for multiple years. But the thing is, having those types of people on your team and being able to poach, some strong operators at other competitor dispensaries, showing, how Gage has continued to, elevate itself. We get a consistent inbound of people that want to work for us, and we get to handpick, some of the best people. So that just touches upon a little bit of the items why, we are experiencing such great sales on a per location basis versus some of our competitors. Another one, are you exclusive? Yes, so we are exclusive with Cookies in Michigan. We were their first partner outside of California. They gave us the exclusivity. They recognize the size of the Michigan market, and put a lot of faith in us. And to be honest with you, we put a lot of faith in them as well. You don't often see a scenario where, brand that does exceptionally well within one state can easily go to another state and do just as well, especially in this space. So, we're particularly proud to be partnered with them. We're particularly proud to have an exclusive with the Cookies brand. So any Cookies product that you see in the market now in Michigan, that is not being sold at a Gage or Cookies branded dispensary is probably not the real thing. So I would encourage, any of you that actually do consume the product to ensure that, you come to Gage or you come to the Cookies locations to ensure you're getting the real deal. And so next question here, as you move from medical to adult use, any idea how much wider of a market that is accessible to Gage? So that's a great question, and probably something I should have tapped into earlier on. And so, at its height, Michigan had about, I would say, close to 400,000 medical patients. So a pretty robust system, pretty much what, Florida has today. Florida is well into the 400,000s. They've surpassed Michigan as the second largest medical cardholder base in the US, still behind California. I think they'll continue to grow, Florida, mainly because they don't have adult use. And I would say the Michigan market from a medical standpoint will continue to dwindle as well. So, from us moving to medical to adult use, I say is also another transformational item for us. Right now, tapping into 245,000 patients is great. Being able to tap into 7.5+ million people that can consume is obviously even better. I would say maybe one little knock against us, not to talk, always too positive about everything, is the fact that we did not, convert a lot of our locations to adult use up until this point. And so right now, we wanted, and I would say, we couldn't. We wanted to maintain, again, good consistency in our brand, and we knew our cultivation was coming and ramping up. And so now that we have that comfort, now that we know that that particular aspect of the business is covered off with our third location producing product for us in the coming weeks, now we're confident, to go out to the adult use market and really, take advantage of that market. And so, the accessibility, again, it's way more people. The ability to be in markets that, everywhere else, or sorry, everyone else that's competing in that market with you is also adult use, I think is going to help us immensely improve on the already great numbers that we see on a daily basis. And so again, I think, when you have, generally when you have, medical to adult use dispensary switches, you see a great increase in influx in terms of sales at those particular locations. And so we're excited to see what's to come. Another question, you're looking to expand outside of the state after 2021? Most definitely. So I think, when you take a look at it from a return on invested capital, right now, every dollar I spend, like even if I were to get, let's call it $10 million, and, with that $10 million, I could either, continue to grow in Michigan and build my platform, or maybe go out and buy a license in another state, whether that state be, let's call it Florida, for example purposes. What I could do with $10 million in Michigan, especially now, considered that we have such a good, strong underlying base of assets, we've spent, appropriately and intelligently from a CapEx standpoint, and we put the money to good use, that now we have, again, strong cultivation base. We're going to have a strong processing base, and we have a strong retail base. I can do so much in terms of acceleration with that $10 million instead of going out and just buying a piece of paper for it. And so we'll stay put in Michigan probably for, a good part of the 2021 year. Again, taking a look at that return on invested capital factor, it's just too good in Michigan right now. But as we continue to execute in Michigan and cash flow, continues to get better and better for us as a company and operationally, we will most definitely be expanding to other states. There are a variety of states that are performing exceptionally well, especially some of the states that now, have adult use: New Jersey, Arizona. Illinois continues to perform almost as good as Michigan. They've kind of been, Michigan's been kind of ahead of them, for the past 4 or 5 months. But Michigan had a very strong, Illinois had a very strong October. We'll see when Michigan's numbers come out. I think they're going to kind of be neck and neck for October. So for us, we most definitely will be looking at other states, but want to have a keen focus on, one particular state, doing that state exceptionally well, having, appropriate, cash flow to the firm, to then thereafter and go invest in another state with that free cash flow versus having to continue to tap into, investors or debt transactions in order to service those new acquisitions. And just a couple other questions. Just one second, guys. Okay, so a question here on restrictive licensing and geographic zoning requirements are obviously important competitive modes. So most definitely. So one aspect about Michigan that I think is really important when you take a look at it from a competitive standpoint. It is not that easy to get operational assets up and running in multiple cities. And so the fact that, us and maybe a few others, I would say, they're not many, have been able to build this big, base in terms of assets, having 3 cultivation assets, operational, having a processing license operational, having another processing license operational in the coming months, having already 5, locations operational from a retail standpoint. And I would say we have another 4 dispensaries that are virtually completely built out that we're just waiting to turn on. And those include Kalamazoo, Bay City, Grand Rapids, and Battle Creek. Most of these locations are, I'd say, 95% complete at most. 2 of them actually we have already our certificate of occupancy in terms of Grand Rapids and Kalamazoo. And I believe actually, sorry, I should even say Battle Creek, I believe we also have our certificate of occupancy. And the Bay City location, we anticipate that being open in a short period of time as well, and getting that certificate of occupancy soon. We'll be actually having that one as a Cookies location. We anticipate our Kalamazoo location that will be opening soon, and our Bay City locations to be Cookies locations. And those are both adult use locations. They'll be the first adult use markets, adult use dispensaries with the Cookies brand. So back to my point here, in order to essentially have that expansiveness in the portfolio, having to deal with each and every separate cities, especially now that we're dealing with COVID, I think it's going to be so tough for any new entrant, especially let's call it a big MSO, to come and actually put a dent into the Michigan market unless they acquire somebody like ourselves. And so that really allows us to continue to thrive in Michigan and build ourselves up. And, evidently you don't have the same access to capital as a big MSO, but I think obviously through this financing that we're currently doing on the Reg A side of things, that will help. And so it'll be so hard for, someone to catch up to us, and so hard for, someone to actually catch up and have the same type of scale. And, even when you look at the cities, right, 2/3 of the cities in Michigan continue to, not opt into the program. And even those that have opted in, those particular cities, they don't even opt in for all of the licenses. And so, you have some locations that are cultivation only. You have some locations that are retail only cities. And then, some cities allow consumption lounges. Some cities allow delivery. Some don't. And so it's really, the thought that has gone into where we wanted to acquire our licenses, or apply and win those licenses. We spent a lot of time thinking about that. And again, for someone to come in and get that done quickly, especially on the cultivation side of things, I think is going to be extremely tough. Not saying there won't be new competitors or new market entrants, but in terms of large competitors, I think those will predominantly stay, on the sidelines, especially when you look at how competitive Michigan is. Michigan is just as competitive as, California, I would say. So those that are performing extremely well, as a brand in California and Michigan, those are the guys that you want to keep tabs on, especially as they continue to expand to other states, because those particular companies are very dialed in with their product offering, because they've had to deal with a demanding consumer versus, in another state where, there's just not enough product to appropriately supply the market. And no matter what kind of product you produce, regardless of the quality, it gets purchased by the consumers in those states. When you come to places like California and Michigan, again, you need to be really dialed in, especially with your flower offering. And that's something we're doing, and that's something that's going to really help us as we continue to expand, in Michigan, and more importantly, out of Michigan near the end of 2021. So just a follow-up question to what I just talked about. The individual is asking, if there's any danger to restriction or loosening of the licenses. So hopefully I'm understanding this correctly. Generally, the restriction, I'll talk about that. We're not necessarily seeing any further restriction in zones that have already opted in. So you have cities. Some cities have unlimited licensing. Some cities have a set number of licenses. Up until this point, and keep in mind, we're approaching 3 years on the medical market side of things in terms of when the state brought in the new regime. And we're approaching now a year of adult use sales. In no city that I can think of have there been restrictive measures on the licensing that's already been established. In terms of also loosening, I haven't really seen that either at all. I think a city has decided, or generally the cities have decided, a set number of licenses, whether that be unlimited or whether that be a specific number of licenses within their cities. And I haven't really seen a lot of cities stray from that. I think the cities that have decided to opt in appreciate the investment, the jobs that are created through some of these cannabis companies that come to their cities. For them to continually have a moving target for the amount of licenses they issue or restrict, etc., really doesn't do the industry any good, especially when it's competing against the illicit market. And I think the state recognizes that, and more importantly, a lot of the cities recognize that as well. So hopefully I answered that question, but frankly, again, not really seeing any restrictions or loosening of any of the licensed cities that we already operate in. Okay, everybody. So thank you very much for your time. I appreciate it. If you do have any other questions, again, feel free to reach out to ir@gageusa.com. Someone from my team or even myself will respond to you, within 24 hours usually. If you have any other questions related to the Reg A process and the investment opportunity, I encourage you to go visit gageinvestors.com. It will allow you to really get a feel, again, for our brand and some of the other details that I touched upon. And at the end of the day, thank you very, very much for your time. I appreciate you, taking the time out of your busy schedules to listen to us, to listen about our story. Thank you to Sandy and Rob for giving me this opportunity. And stay safe, everybody, and hope to see you guys investing in the business and investing in our growth. Take care.